Hi guys, good evening. Thanks for patiently waiting for this session. I think we've had a quick round of introductions, but I'm going to do my version of the introduction. So on the panel we have 4 very qualified investors, 2 who provide equity financing and 2 who provide debt financing. They will obviously speak about their funds and how they look at investments. But in the interest of time, I want to sort of get right into the topic. Obviously, we're talking about macro trends that are shaping the future of the country, especially when it comes to investing. So I think we can possibly go around the table, obviously have you guys introduce your fund, and then just talk about how do you guys look at opportunities at a very early stage when it comes to consumer opportunities, and we're talking consumer in the broader sense of D2C, retail, e-commerce. So I'm going to start with Amol, and then we can just go around the table.
So thanks, Ashim, and thanks, Varun, for having me here. I represent Omidya Network India. We are an impact investment firm. We have invested close to $2 billion globally, around $400 million in India, investing across consumer tech, edtech, and fintech or financial services. Coming to a question in terms of how would we as investors look at a consumer tech or a direct-to-consumer play? I would say 4 things. First and foremost, the size of the market or the potential size of the market. Second is really the kind of product you're building, and here different investors will have different interests. For example, is there a category creator? So 2 of our investments, Healthcart and Wingreens, both were creating new categories when they started, right? Or it could just be unorganized to an organized marketplace. Licious is a great example of that, right? Or it could be creating niche products in a mass market which is dominated by global or large companies, right? It could be themes like climate or sustainability or something else, right? So different investors will have their pick of the themes that they would like to back, right? So that's point number 2. Point number 3, I would say, is the team. And what I mean here is the passion to really build a brand, their understanding of the consumer, the ability to continuously innovate and stay relevant. In the current times, I mean, forget brands, industry segment themselves, we don't know whether they will exist after 5 years or not. So I would say these are the things that as an investor, we would look at when we consider investing.
Yeah, hi, good evening everyone. I'm Vivek, I'm from Trifecta Ventures. Trifecta Ventures, we are a venture debt fund. So venture debt as an asset class, we come along with venture capital, and we come as a growth capital in the form of debt. As Trifecta Ventures, we have a portfolio of over 120 companies across all the sectors. We are sector stage agnostic fund, and we would have 5 funds close to $500 million right now under our AUM, if you would want to call it that. And in terms of the consumer space, in terms of tech as well as retail, largely we have been investors from early stage till maybe till the last stage, which is largely if you look at companies like Sugar, MyGlam. So those kind of investments we did quite early, and what we saw was one thing that we have been very clear from our start of fund has been the unit economics. So what we have been very sure of, that if a product or a service is not able to make money on a standalone basis, that is the maybe the gross margins or contribution margins, that it doesn't, then largely how much amount of capital you raise, how much amount of performance marketing, team building you can do. But if the product or service at a standalone basis is not making money, largely the business would not be able to scale or generate money. So one is that. Second is obviously the team that we normally look at, and the team, it includes the passion as well as the experience. And in the categories, various categories that are there, we normally look at the total addressable market, like Amol said, but we also want to look at what if there is a vertical or a horizontal play that a brand would be wanting to play. So how much a repeat customer can be there? I think while creating a brand, that is something which actually makes you money and which actually gives you scale. If you have repeat customers, so that is something that we would want to look at. There are other things, but yeah, these are the larger things.
I'm Saurabh from Trifecta Capital. We manage a venture debt fund with an investable corpus of about $1 billion now. And we have a late-stage equity fund, which is $250 million. We invest in Series A to D startups from the venture debt side, and then usually Series C onwards from the equity side. Specifically, in terms of what kind of companies we look at, D2C, we continue to look at beauty and personal care, food, clothing, even consumer durables. We have an investment in Attenberg. We hope more companies come up in that space too. In the retail side, we continue to look at the B2B segment more compared to direct to consumer. In the B2B side, I think opportunities still exist in kind of the below the distributor layer. So startups which can help solve for bringing more information directly to the brands, where products are selling, how they're selling, SKUs, etc. And in the e-commerce side, I believe there's plenty of companies already, but probably, I think vertical e-commerce is one where some opportunities might arise. So that's what we are tracking. Thanks.
Thank you. Hello everyone, I'm Harsh. I'm an investment professional at Flourish Ventures. Flourish is a global fund that invests in early tech companies across the globe. Our major markets are US and emerging markets. Within emerging markets, we invest in Latin America, Africa, Southeast Asia, and India. We've been very active investors in India as a market. I think a lot of the points have already been covered by my co-panelists in terms of what we look at while we invest in early stage businesses. But all I would say is that as we look at these opportunities, the first point we think about is what is really the need for these companies to exist and how are they disrupting the existing market, right? And then that covers a lot of things, right? How big is this opportunity? How is the company which we are evaluating, how are they building long-term moats, right? How are they going to disrupt the existing paradigm and create value for the end customer as well as for the business so that it's sustainable. My co-panelists here covered like all the factors, like we look at contribution margin, gross margins, which covers in the ability for that business to generate revenue and then profitability. Besides that, one important factor is ability of the founders to exist in that space and also recognize the need of the end customers and build a product which is, of course, ultimately loved by their end customers. That is a very important factor that we look at. What is the feedback that customers are giving on the product, whether they're liking the product, what are their views on the product, because ultimately they are the end consumers. So yeah, those are the things that we would ideally look at.
Thank you. So if I had to summarize for the audience, we're broadly talking about the addressable market, we're talking about the category that they're going after, we're talking about the team, which goes without saying, and then we're obviously talking about repeat rates, what is, is the unit economics in place, is there really brand love that there is, right? So one of the questions that I've often, been asked from people in the ecosystem is that a lot of investors would make investing, which is around the fad or the trend which is playing on, right? So every year you'd hear that this year the flavor of the season has been food and beverage or beauty, personal care, and so on and so forth. So how do you as investors, and maybe more specific to the equity guys, because I know for both of you in debt, you guys come much later, but how do you guys sort of recognize that this particular business or this founder will be able to sort of build this through the longevity, right? And not a business which is just built on that fad. So if you guys want to share some thoughts on that. Harsh or Amol?
No. Yeah, so I think, as I was saying, right, it boils down to a couple of things. Firstly is what's their new take, and what is it that they're doing differently, right? Because if you are repackaging just an existing thing, that's not what everyone's excited about. What everyone's excited about is what is the new thought process that you're bringing to the existing problem, and does the problem really exist, or does the market really exist? And most importantly, I think for specifically for brands is what is the customer feedback, right? Like, are they liking the product? Do they believe, or is there an affinity towards that product? Then there are multiple factors which come in, right? Like you may see adoption, because India being such a huge market, you may see adoption at early stages. But what are your views on how will this scale, right? Which has a lot of parameters just in terms of the price points, right? Like if you're trying to sell a real premium product, how mass market is it? And you're okay to take a bet on a premium product, but how big do you think that market is? So I think it's always a bet at early stages that we take, but there's a bit of thinking that goes behind saying that, is there a market which does exist where people will be willing to pay for an additional product, and what is the demand for that product, right? And then you take a bet, and then you see, right? I mean, we've seen players in commoditized industries like cosmetics come up, but they've been able to create a space for themselves, and there's a reason, because they did offer something which was differentiated. So yeah, I think those are some of the things that you would look at.
Amol, do you have any thoughts to add?
Yeah, so I don't think investors, at least many investors, follow fads. Building this off that is a strategy, right? It's not following a fad, but looking at something that has worked elsewhere. Can you customize and build it for India? I think that's a very interesting investment strategy. Outside of that, I would say, like Harsh mentioned, if there's a real need or a problem that is being solved, and there is some kind of a moat, which could be a product innovation or a process innovation or a distribution innovation, whatever it is, anything which can provide you non-linear scale, then it's easy to take those calls. I wouldn't completely agree where there are a set of momentum investors, but everyone knows it takes at least 10 years to build a good company in India. So really, even if you want to back fads, this would be at least a 10-year fad you want to back, right? So.
Very well said. That actually ties in very well to my next question, which is, supply chain, logistics, all of this, obviously creates a very important element of the entire D2C ecosystem, right, that we've been constantly talking about. So what sort of weightage do you put on, the ability of the startup to sort of deliver on that promise, right? Because a lot of, as they start scaling, you want to make sure that they're optimizing across all of those elements, right? And then comes branding and marketing and a whole bunch of things. So how do you sort of assess this? And obviously at different stages, right? So for late stage investors, you're obviously looking at a very different playbook versus some of us who do early stage investing. So would love to hear your thoughts. Anyone who wants to go first?
So in terms of supply chain, first thing that you would want to do is that in current scheme of things, there are a lot of logistics players who are there specializing for D2C brands. And what we have seen is that while the founders have, if they have found the product which is there, they are able to control the quality, then supply chain solutions are available. And you don't have to build in current scheme of things everything from scratch, because there are solutions which are available. It's only that you have to be smart enough to find out those solutions, try to stitch them together, what works for you, and then deliver. So what we have been seeing largely is that if the product quality, control, and logistics are automated, then brand is able to reach to the customers. And if you are able to reach to the customers, then you can build upon the similar kind of products which are in the same category and keep on building a repeat customer base there. So I think that is, if a brand is able to do that, there is a lot of scales of economies which actually come.
Excellent. Anybody else? Saurabh?
In terms of supply chain, I think it's one is the kind of supply side which founders have to worry about. And when we when we look at startups, we definitely look at kind of how the supply chain looks like from a product perspective for the company, how diversified it is. Is it too dependent on overseas countries, China specifically? And if it is, then we always try to understand what kind of disruptions can come into play. If the supply chain is based primarily in India, then there has to be at least some degree of diversity in terms of geographical presence. There have to be, now it depends on the scale of the company, but ideally there should be multiple suppliers so that a disruption at one place doesn't really lead to a significant impact for the company. Now talking about the other side of the story, supplying the product from the company to the consumer eventually. As Vivek said, there are kind of enough companies right now, at least in early stages, which companies can rely on for supplying their products. Multiple companies, Shiprocket, etc., delivery. I think a lot of them do that. But what matters is, these days specifically, over the past couple of years, what you have seen is if a brand is able to deliver product quickly, so same day delivery or next day delivery, I think it has a significant impact on the customer experience and how the customer perceives the brand. And therefore, this brings into play the geographical distribution of the warehouses, what kind of partners do you have. If most of the customers, let's say, are in tier 1 cities, the metro cities, then there should be one warehouse in Delhi, maybe one in Bangalore. Now there are costs, etc. at play, scale of the company, etc. at play. But if a company delivers a product in 1 day vis-a-vis 4 days, I think it makes a big difference. So that is something to be, founders should look at. In terms of branding and marketing, I'd say it's difficult to come up with a thumb rule, but at least what we have seen in some of our Series A, B, C startups, I think 10 to 20% kind of the revenue they have spent, that kind of keeping their spend in that range, so that they're not too much CM contribution margin negative. I think it's a fairly good number, at least in most cases, what we have seen.
Thank you. Amol and Harsh, any thoughts? No? So I think I can already see the time up buzzer. So I think in the interest of time, if we could just go around the room, and if you had one piece of advice for any of the retail D2C founders who are seated here, what would that be? And maybe we can start in the reverse order. So one piece of advice to a young D2C retail e-commerce founder who's maybe setting up a new business or has set up something recently, what would be that one piece of advice you guys would give?
I think a lot of the founders here are like mature and strong founders, but one thing would, from my end, typically when I go in is what is the depth and knowledge that you have about your particular industry and sector that you're operating in. So any category that you are dealing in or you're getting into, please ensure that as an early stage founder, please ensure that you spend enough time knowing the nuances and the dynamics of how that particular market operates, because at least as an investor, I am going in hoping and that you are the master of the sector that you're operating in, you know the ins and outs, and that really determines the long-term play that a founder has, right? Because it's a long game, it's a 10-year journey, and you need to be convinced of the problem, you need to be convinced of the challenges, and you have a thought and a vision how you're going to solve for that, for which you need to understand the market really well. So having spent enough time just grounds up, I think that would be really important.
I'll quote 2 examples and then 2 advice which or 2 suggestions which come from these 2 startups. So there's a startup called Slurp Farm, which focuses on millet-based food products for kids. Now they're launched for adults too. So this particular company, very stellar set of founders, they actually took a lot of time which they spent on developing the product. They talked to a lot of consumers, really understood what was the customers looking for. And they spent a lot of time doing iterations, R&D, and then came up with the product. They actually took substantial time, almost 2-3 years, before they reached their Series A. And now it's reaping rich dividends for them. Now they're growing at a hyper pace because they have spent that much time trying to understand. what customers want. So, while story is important, please do focus on the product. Eventually, that's what will sell. Story will get you the first, story will get you a customer to try your product, but it may not necessarily get the customer to purchase that product again. And then, second, I would suggest that, another company called Milo, what they have done great is, so CAC is a big problem in startup these days, the customer acquisition cost. So what this company did great was they actually started with a community. And their community, which they worked on, it's a parenting-based product app. They developed this community so well that when they eventually launched their products, their CAC was actually one of the best in the industry. And their retention cohort is something, which is really unheard of in the D2C segment. So look at these kind of methods, community, for example, or some other methods, because CAC through Facebook, Google is just too expensive these days.
So in the interest of time, I'll keep it very short. We have some signal there. So I think from a D2C brand, and we are talking about Omnichannel these days, so if we are able to keep the experience and journey for consumers same across the channels, that gives the moat to brand, because consumer is aware that I'll get the same kind of experience across channels, be it offline, online, e-commerce, D2C, whichever model you're working on. Just if we are able to create similar experience, which is a good experience across the channels, it gives a very strong brand presence and obviously a word of mouth.
So first, a caveat, investors are the last people you should take advice from if you are an operator. We are just too capitalistic to really give you sound operational advice. What I have seen is the founders are very passionate about their product or service or their idea, which is really required and important, but don't trade the commercial aspects of building a business for the love of your idea or brand, right? Or in simpler words, don't trade profitability for scale. Keep that commercial business sense around, because finally you exist as a business to make money as well.
Thank you, and I think it's become all the more relevant in today's times. So with that, we'll call a close to this panel. Thank you all for your insightful thoughts.